Welcome back to Tranquil Traders. Today we're diving into a hot topic, systematic crypto trading. My inspiration for today's episode is Adrian Reed from Enlightened Stock Trading. He's been trading systematically for nearly 2 decades, and his insights on bringing structured, rules-based trading into the wild world of crypto are exactly what most traders need to hear right now. Systematic trading is all about bringing order and discipline into a market that is naturally chaotic. In crypto, that discipline matters more than almost anywhere else. The market is 24 hours a day, 7 days a week, with constant volatility, sudden news shocks, and price swings that can make even experienced traders emotional. Most people come into crypto and make decisions based on gut feel or social media hype. A systematic trader approaches it differently. They rely on rules, structure, and proven strategies. The key advantage is consistency. A systematic trader builds a set of rules that define exactly how to enter a trade, when to exit, how much to risk, and how to manage a portfolio. Instead of being swayed by fear, greed, or the latest narrative, they follow a plan that has been tested. This allows them to measure results objectively, improve over time, and avoid the trap of changing strategies mid-trade. Another critical point is risk management. In crypto, the potential gains are huge, but so are the drawdowns. A systematic strategy includes strict position sizing, stop losses, and portfolio controls. This means a single trade cannot wipe out weeks or months of progress. By embedding risk control into the system, a trader increases the chances of surviving the inevitable downturns and staying in the game long enough to benefit from the big winners. Adaptability is also a strength. Markets change, and crypto evolves faster than most. A rules-based approach allows traders to backtest across different conditions, refine their systems, and adapt to new market environments without starting from scratch. For example, a strategy that worked well in a bull run might need adjustments for a sideways or bear market. Systematic traders can measure, test, and update instead of guessing. Systematic trading is not about predicting the market with perfect accuracy. No system wins on every trade. The goal is to create a robust process that produces positive results over the long run. With discipline, data, and repeatability, traders can turn crypto's volatility into an advantage. Instead of being tossed around by emotions, they build a durable edge that compounds over time. In systematic crypto trading, one of the key challenges is using regime filters, tools that help decide whether the market is in a bullish or bearish phase. Bitcoin often dominates the overall crypto market cap, making it a natural starting point for filtering regimes. But here's the trap. We only have data from about 4 meaningful bull-bear cycles. That's not much. If you design a filter that switches on and off only a few times in history and looks perfect, you're probably curve fitting. The goal isn't to optimize to perfection. It's to build regime filters that work broadly across settings and avoid overfitting to a tiny data set. This ties into risk. In crypto, risk appears on 3 levels: catastrophic, system, and position risk. Catastrophic risk includes regulation shifts, sudden crashes, and exchange failures. Traders must stay nimble, diversify across exchanges, and never stake their entire portfolio on crypto. System risk comes from strategies failing as markets evolve. The solution is diversification across multiple systems, constantly backtested and monitored. Position risk is the danger of falling in love with one token. Just like the car or dot-com booms, most projects will disappear. A diversified approach with small allocations avoids catastrophic losses when tokens fail. Liquidity also matters. The crypto market is open 24/7, but not all tokens are tradable. A system should filter out low liquidity assets, factor in spreads, and ignore the garbage. Missing a moonshot meme coin is fine if it means achieving steady, repeatable results. On trading styles, the focus is on daily and weekly systems rather than intraday. Crypto moves fast. Cycles are compressed and tops reverse quickly, so systems must be nimble with shorter-term parameters than traditional stock systems. Hard stop losses are always in place, combined with exit rules based on price behavior. Unlike stocks, you can't afford to turn losers into long-term holds because many coins will go to zero. As for instruments, the sweet spot is high-volume tokens on major exchanges like Binance or Coinbase. That offers enough breadth for diversification without the headaches of exotic illiquid markets. The development approach starts with a market hypothesis, observing a pattern, then building and testing a system around it. Backtesting is essential, but robustness matters more than optimization. A viable system should work across a wide range of parameters, not just one setting. Simplicity, or better, elegance, is key. The bottom line, crypto may be new and volatile, but that doesn't mean abandoning discipline. A systematic, diversified portfolio of strategies keeps risk manageable, avoids emotional blowups, and ensures survival across cycles. With careful system design, small positions, and broad diversification, traders can thrive in the most unpredictable market in the world. So here's the takeaway. Crypto is still wide open for traders who bring structure, discipline, and rules into the chaos. If you can stick to systems, manage your risk, and understand why your edge exists, you'll be playing a completely different game than the crowd chasing hype on social media. That's how you turn crypto from a gamble into a business. Thanks for tuning in to Tranquil Traders. Before you go, be sure to join our Telegram using the link in the description. In our Telegram channel, we use systematic mean reversion approaches to highlight potential trading opportunities. Whenever our system generates a signal, we post it directly, complete with the asset, entry price, and action taken. We do this for educational purposes, completely for free. Transparency is at the core of what we do. That's why we provide the full backtest history for every strategy, covering years of market data. This way, you can see exactly how each approach has performed across different market conditions before following along. Don't wait. Join us today, and let's make this journey together.